One of the important things we all need to think about is our investments, and for a lot of people it's something they try and do on their own, but we find that a lot of folks do better with a little bit of help along the way, and our next guest is someone who helps people make those important decisions. William Jordan joins us again today from William Jordan & Associates in the local area. Welcome back to the show.
Thank you. Good morning.
In addition to helping people on an individual basis, you also send out some information kind of in a general nature. You do a lot of articles and writing. You've got a new article coming out in the upcoming issue of Life After 50, and you talk about a little bit about what's going on with the stock market today.
Sure.
But you have a philosophy there of a 20-year plan.
Right.
For people 60, 65, they're thinking, 20 years, I'll be happy to be here in 20 years.
Yes.
Isn't that stretching it a little far for some people?
Yeah, it can be, and I think the point is well taken, and it's almost this challenge of we need a short-term plan, but we still have to be thinking long-term. And I'd say what's just most important, whether someone's just entering retirement or they're already well into retirement, is with the uncertainty that we're in, people need to know, where is my income coming from? It's all about that confidence in my income is taken care of. And so I really just fundamentally, in a simplistic way, would divide someone's portfolio into an income side and a growth side. And the income side should be designed to create all of their income for the next 10 years, maybe even longer, without them having to worry about what's going on in the stock market.
And I think for a lot of people, although some people choose to work because they enjoy the challenge, enjoy
Yes.
the interaction with their coworkers, a lot of people don't want to have to go back to work.
Right.
And unfortunately, we're finding a lot of folks are trying to go back to work, and obviously the older you are, getting a new job is sometimes difficult,
Yeah.
at least a job at the level at which you're used to being
Sure.
compensated for. So for a lot of people, they're really going to rely on those investments. And so you're saying kind of break it up into 10-year increments.
Yeah, I think the way I would address what you're speaking to is I call the money folks have accumulated by retirement irreplaceable dollars, because you've hit the nail on the head. Someone's not going to go back and be able to earn at the income they were once earning at to replace those losses. Whether they should take any risk or not, that's a discussion on the growth side, but on the income side, it's all about safety, preservation of capital or guarantees of principal, and then knowing that we can access that money for the next 10 years without having to worry about creating more income, going back to work, or doing something drastic to try to fix the problems that are happening on the other side.
You talk about the growth side of that, and I know a lot of people are really concerned about the fluctuations in the market losing their principal.
Sure.
And I know there's some techniques and ways you can help them to
Yeah.
maybe not guarantee that, but
Right.
to kind of stack the odds in their favor.
Of course. Yeah, there really is a lot that can be done even on the growth side as to, are we taking an extreme amount of risk? There are layers of risk, and the question even should be asked, do I need stock market investments in the growth side of the portfolio? And if I do need them, or if I don't need them, do I even want them? Everyone's going to have a different answer there. So the income side is definitely safe. The growth side is really going to be customized more for the fit of the person. And if they're doing their own investments, they can take that same philosophy and really think about, what level of risk am I comfortable with on this side?
So really, depending on the person's income needs and their style, what they have going into the program,
Sure.
they may not need to be in the stock market. They may choose to be. Some people, as my late mother-in-law used to say, she enjoyed the game.
Right.
You either go to Las Vegas or you play the stock market. I mean, that was kind of her choices on that.
Yeah.
And she had the ability to do that. Not everybody has that flexibility, but some people shouldn't be in the stock market, perhaps.
Well, I think the question just has to be asked. So if we've got the guaranteed income side for the first 10 or 15 years taken care of, now on the growth side of the portfolio, and obviously I'm simplifying here, but on the growth side, the question should be asked, do we need stock market investments? For example, what if someone could accomplish every income goal they have for the rest of their lives, and they really only need to have CD rates with their entire portfolio? So now they don't need stocks. Then the discussion is, do I want stocks? Now I'm really talking about legacy, the inheritance or estate that I'm going to leave. Do I want stocks to try to grow that a little bit more aggressively, knowing that I don't need to have stocks? It's a very different point of view to come from.
Do you find that sometimes people have a warm, fuzzy feeling about a certain company? They may have worked for that company,
Sure.
or it may be a company that was in their hometown, or industry they follow. I mean, we think of companies like Disney,
Right.
which makes great family entertainment. Some people just may want to be invested in that so they get invited to the annual shareholders meeting and get their free tickets to Disneyland.
Yeah.
I mean, there's those kind of reasons to invest as well. But for some people, the stock market, maybe they should stay away from it. What about the stock market? Where do you see it going? I understand it was up a little bit this morning, but a lot of people worry about it, 5-minute increments, they get all shook up.
Sure. Whenever someone asks me about the stock market, and it's probably one of the most frequent questions I get, where's the stock market going? I always hedge and say I have to give you two answers. I can't just give you one. So the first answer, is, as odd as this sounds at times, is it doesn't matter in the short term. Because once again, if we've got this income side of the portfolio and stocks are not a part of that, then the stock market should have no bearing on our income, on our enjoyment of life for 10 or even 15 years. And by doing that, we've not guaranteed ourselves, but we've dramatically increased the odds that we're going to be happy with our stock market performance. So the first question is always stop looking at the stock market today. Now, the second question, then the second answer is, since we're talking about 10, 15-year time frames, well, the stock market's going up, almost without exception. If you take a 10-year period of time, you've got a 90% certainty the stock market will be up in that 10-year cycle. If you go 15-year cycle, you have 100% certainty there's never been a 15-year period of time in history where the market wasn't up. So I can answer that question, yes, the stock market's going up, which is why we should consider it here. And my closing comment on the stock market when someone asks is always this. If where you're going to go for dinner, or if you're going to go out for entertainment this weekend, or what your lifestyle is going to look like in the next 1, 3, 5, 7 years depends on an accurate stock market forecast, you have the wrong plan.
Okay. So it sounds like, again, what you're all about is customizing it to individuals. One size does not fit all. I know, face it, there have been people in this area, in this community, that they push everybody into the stock du jour.
Right.
And sometimes that's a decision that they're not making. It's coming from higher up in their management of their company, is saying, today we have to feature this stock.
Right. The good news is we have the freedom to basically recommend anything. And so in one day, I might have 4 different meetings. One person, all we talk about is the stock market. The next person, it doesn't even come up as a consideration. And it's all about understanding where is someone really coming from and what is it that they're trying to accomplish.
Yeah.
Because as I said, if they're trying to accomplish something that they've already reached, they've already accomplished their goals, their income is going to be fine and more than they want for the rest of their lives. Now it's really about customizing it totally to them, whereas someone else might be in a little more of a situation where, okay, I need some stock market growth, and I'd still ask the question, are you willing to take the risks of the stock market, or would you like to scale back some of the other goals you have? And that's a very personal answer.
And again, you're looking at the right mix for that individual or for that couple to have the thing that they're going to, 1, be able to sleep at night, and 2, be able to be content and happy with what's going on. And then the third aspect, I guess, is the legacy aspect, which you talked briefly about, whether it's the kids or the grandkids. And there's a lot of things people can do, set up education accounts. You can, so to speak, attach some strings to the money. They have to be 21. They can't use it for certain purposes. Maybe it's administered by somebody that you consider a wise person to help them, especially if it's a young person, to make the right decisions with that money. So there's lots of ways you can control, even when you're gone, what happens to your estate, so to speak.
Yeah, we actually do trust management or estate management for folks in that circumstances. And I would say it's a huge area that needs discussion on the front end because of the law of unintended consequences. You make one decision, and all of a sudden it has these consequences that perhaps you didn't envision, and now you're gone, and there's no legal way to change that.
Yeah.
So if they're trying to kind of control things more when they're gone, it's imperative that they seek good counsel and they really think through all the implications, or that they have a firm that's going to handle it for them when they're gone, and they allow some flexibility, because you can't anticipate every possible scenario.
Well, face it, people in Sacramento and Washington change the laws every year, so that has an impact on everybody's investments as well.
True.
William, thank you for joining us. See you back here next month with more of what's going on.
Always
Thanks
a
for being
pleasure.
with us today. Thank you very much. William Jordan and Associates, right here in our local community. Again, you can give them a call, find out more. 380-8600 is the number, and they're happy to meet with you and find out if they can help you with some of your decisions in this important area. We'll be coming right back with more after this.
Thinking about your money, your investments, what's most important to you? Reaching for those last few percentage points of gain in a good market, or protecting from losing money in a bad market? If you were like me and my clients, you said protecting from losing money. I'm William Jordan, and at William Jordan Associates, we help our clients protect their assets while increasing their income. Want to protect from losing money and maximize your income? Call to attend one of our free maximum income workshops today.